Welcome back to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference Vancouver, and I'm thrilled to have Keith Neumeyer back with us again for an update on First Majestic. It's great to have you here, Keith.
Thanks, Vanessa. It's been some time.
Yeah. Now, you've been pretty diligent on delivering growth through operations and profits, but you recently raised $30 million for expenses. So what was the thinking behind that?
Well, really just to shore up the balance sheet. 2014 was a difficult year for us and for all the miners. You know, we found ourselves not being able to cut costs as quickly as prices were dropping.
Right.
And it was really starting to burn cash, and the balance sheet was getting, in my view, a little bit low on the cash side. So I decided to take an opportunity. A bought deal was offered to us by Bank of Montreal, and I decided to take it. You know, it's kind of strange actually. You know, the price we did it at was $6.50 a share. And I know the stock was at $26, it's high,
right,
back in April of 2011, but $6.50 still represents the highest price we ever raised money at in the 12 years of the business.
It's a good sign of confidence.
Mm-hmm.
And I mean, like you're saying, it takes time. There's kind of a time lag there where you're adjusting all of your costs downwards and kind of catching up to the silver price a little bit there. So. Mm-hmm.
It was very traumatic. You know, we just didn't expect the silver price to drop as dramatically as it did, and we weren't ready for it, and I don't think anyone was. And you know, back in 2011, 2010, 2011, you know, we were building 3 mines at the time, and I think our budget back in 2011 was something like $250 million
wow, in
capital going out the door, investing in assets. And you know, this year in 2015, our investment's going to be around $70 or $75 million. So it's a huge change from before.
Right. Now, how do you feel about the costs now?
We're looking good. Q1 was a good quarter. We came in at $13.88. Which is below expectations or below guidance. I think we can actually do better than that. We've got an internal target of around 12.5. We'd like to achieve in the next couple of quarters.
What'll help you do that, you think?
Well, a lot of it's just moving a lot of the costs inside the business. You know, when many investors may not be aware of this, but you know, when we were building like crazy, as all the other miners were, we couldn't buy equipment. You know, for us to go order a scoop tram for Sandvik, for example, they would say, "Oh, thanks, you know, for the order, but you know, you're going to have to wait 18 or 24 months to get that piece of equipment."
Oh wow!
So you know, if you were wanting to develop a 1 kilometer tunnel underground, you just didn't have the equipment or the people to do it. So you had outsourced a lot of this work, and our development costs went from $600 a meter in 2006 to $1,800 a meter in 2011. And development is the largest cost of a mining company,
right, because
it's all that underground work that needs to happen, right? Without that underground development, you're not going to be producing an ounce of silver. So it's a huge cost, and in 2014, that cost came down to $1,300 a meter. This year, we've got now 3 mines developing at less than $1,000 a meter.
Right.
So, and that's a huge cost. It's about $15 million in cost savings year over year.
Now, back to the $30 million, where will this money take you? And will it create more dilution for investors?
Well, of course there's a little bit. You know, you're selling, you know, we sold, you know, what, 4.5 million shares at $6.50. So it is extra dilution. But,
right.
You know, and you always have to weigh these things. You know, and I know shareholders sometimes get frustrated and so on. But you know, I'm the largest single shareholder, so
right,
if anyone's getting diluted, I am. So you know, my job is a little bit more complex than simply an investor investing in the company. I have to have his needs in my forethought,
right,
of course, but I have to protect the business. You know, I've got not only 38,000 shareholders, but we have almost 4,000 employees, and
wow,
our mines, because they're the primary employer in each of the towns that we're active in Mexico, we have about 30,000 people in Mexico that rely on these operations. So it's a big responsibility. So that money was needed, I think, to shore up the balance sheet. I think it was the right thing to do.
Now, you just released your most recent results and you dipped into a loss. When do you expect the company to return to profitability?
Yeah, it wasn't really much of a loss. Now, you know, on a operations basis, we're profitable. But there's still some other costs in the business. There's foreign exchange. There's some investments that we have that, for example, we did a hedge on lead and zinc. some time ago, which is costing us money in interest payments and so on.
Okay.
So, that's really why we did that $30 million financing. It's just to take care of that little extra that we have to pay out on a quarterly basis. But the operations themselves, except one, the Lincoln Tata is having some challenge because we're currently expanding it, and we've had some disruptions there. But the other mines are contributing cash on a monthly basis. And Lincoln Tata will start to contribute cash again in July of this year.
Now, what silver price would it take for the stock to take off again to 26 or maybe even new highs?
Well, we're bigger than we were back then. When the stock hit $26 an ounce, or pardon me, a share, $26 a share, silver was close to $50. But we only produced 7 million ounces of silver that year. This year we'll be at over 15 million ounces of silver. So we're over twice the size as we were back then. And we had a market cap of $3 billion back then, or just under $3 billion. We have a market cap of about 650 today. So I don't think you really need a lot. Investors will start to come back into the sector, but they've been beaten up pretty bad. And I think once we see silver start to get through 18 and show that it's actually going to hold these kinds of numbers, then I think people will start to reinvest. And I don't think it'll take much to get the stock back up to $10 or $12 again. But it's just, you never know what's going to happen. That's the thing.
Absolutely.
Yeah.
What are some triggers you see that will send the silver price back up again towards those levels?
Well, it's all investor sentiment. The supply-demand fundamentals of the metal itself is very good. There's lots of demand. You look at this conference today. Half the companies here are high-tech companies, and all these high-tech companies need silver, or they'd be out of business.
Interesting.
The investors don't get it, right? And there's really a supply problem in the silver sector. Silver's been in a deficit for multiple years now, and will continue that way for the foreseeable future. But as long as you can trade Apple or Alibaba or the next high-tech IPO and make 100% of your money,
right?
That's where the money is going to go. And,
right, especially with all these companies going into debt and doing share buyback programs.
It's ridiculous. Yeah. You look at. And in a lot of cases, that's why their earnings are going up, is because of the share buybacks.
Right.
But the big institutions, as long as they can keep making money on investing in the high-tech sector, the biotech sector, they'll keep doing it, and they'll ignore this sector. And the mining sector is tiny, compared to a lot of these other sectors, so it doesn't take much to move it. So whenever that sentiment changes, and we saw it back in 02 to 04 when sentiment changed, after the big crash of the Nasdaq in 2000, 2001. Whether it's an event like that occurs that'll cause everyone to wake up and say, we got to buy real assets again. I'm not exactly sure what the catalyst is, but it will happen, and it'll happen quickly, and it'll start without us even realizing it.
Well, you recognize probably more than most people how depressed the prices are right now on certain assets. So are you looking to buy any within First Majestic?
We've been kicking the tire on a lot of assets. I can't get too specific, obviously, but we've looked at more projects in the last 6 months than we probably have in the last 3 years.
Oh wow!
Yeah, but we have to be very careful. We don't. It's not going to do us any good by buying an asset that needs $30 million in investment.
Right.
Because all of a sudden we're going to blow up our own balance sheet. I don't want to have to go back to market and raise more money to finance somebody else's headache, and that could easily happen. So we're very careful. I don't want to buy a lot of these distressed assets, because that's exactly what they need. They need a lot of capital, and we're just not in a position to do that. So we're looking at assets that don't need money, that we could either put in abeyance and just sit on, or assets that are actually producing free cash today that makes sense, and that could add something to our own portfolio.
Now, what can investors watch for in the next 12 months?
Well, hopefully higher silver prices. I do think that silver will be higher at the end of this year as compared to where we are today.
Right. It looked like it was making a bit of a technical breakout in the last couple of months, or the last month anyway.
Yeah, I agree with that. And gold's holding up nicely, and you saw copper, moving, and lead and zinc have moved up a little bit. And so I think the hate on the sector is slowly going away. And I think some of the big money is starting to look at the sector again. I know a lot of guys are looking at us, kicking First Majestic tires, and no one's jumping in with all 4 feet going and buying millions of shares of stock. But the big funds, are starting to look at the sector.
Excellent. Well, Keith, thank you so much for the update, and we'll be watching with interest.
Okay, thanks very much, Vanessa. Appreciate it.